Hello everyone, welcome back to our channel, where we dive deep into the financial concepts that drive today's markets. Today we're unpacking a key tool in business evaluation, the earnings multiplier, or as it's more commonly known, the price to earnings, PE ratio. Whether you're an investor, a business student, or just curious about how companies are valued, this video is for you. Let's start with the basics. The earnings multiplier helps us understand how much investors are willing to pay for a dollar of a company's earnings. It sounds simple, but there's a lot behind this number. The formula for the PE ratio is straightforward. You take the market value per share and divide it by earnings per share. So if a company's stock is trading at $100 per share and it earned $5 per share last year, its PE ratio is 20. But what does a PE ratio of 20 actually tell us? It means investors are willing to pay $20 for every $1 of earnings, which gives us insights into the market's expectations about the company's future. Let's look at an example. Suppose Company X is a well-known tech giant with stable earnings, while Company Y is a fast-growing startup in the same industry. If Company X has a PE ratio of 15 and Company Y's ratio is 30, it suggests that the market expects higher growth from Company Y compared to Company X. Now, why is this important? For investors, understanding the PE ratio can help in making informed decisions about buying or selling stocks. It's a snapshot of market sentiment and valuation that no investor should overlook. Here are some quick tips for using the earnings multiplier effectively. 1. Compare within industries. PE ratios vary widely across different sectors. 2. Look at historical trends. How does the current PE stack up against past figures? 3. Consider market conditions. Economic factors can influence PE ratios. Remember, the earnings multiplier is just one tool in a vast financial toolkit. It's powerful, but it's not the only metric you should rely on. Thanks for tuning in. If you found this video helpful, give us a thumbs up and subscribe for more insightful financial content. Drop your questions or topics you'd like us to cover next in the comments below. Until next time, keep analyzing and keep investing smart.